So here's my take on the coronavirus and what's happening with the stock market particularly. So basically, as you can see, as of today's date, which is March 18, 2020, you don't have to be a genius to realize the stock market is taking a huge plunge. And if you look at the Dow Jones, which is sort of an index of multiple industries across the board, as of right now, it's down roughly 30 to 40% since about 2 months ago, before this coronavirus pandemic got to the level it's currently at, which is everyone is, very fearful in the majority of places, countries, jurisdictions. There's somewhat of a lockdown, somewhat of a health emergency. Restaurants closed, malls closed, stuff like that. So, to make it simple, the reason it's gone down is because obviously the economy has become affected. Travel has become affected. Employment has become affected. And as a result of the companies and industries slowing down, their revenue goes down, and investors, shareholders of that company, who have equity in that company, realize the revenues and sales and profits are going to be going down, at least temporarily. And as a result, and especially that in terms of the panic as well, it all causes people to sell. Supply and demand goes into effect. More people are selling than buying, and there becomes an oversupply of stock, and the price goes down. Now, why am I telling you all this? Not so you necessarily understand the market, but understand the opportunity in the market. The fact is, this coronavirus is bad, yes, and it's temporary. The coronavirus will not last forever. That's obvious. Whether it lasts another 3 weeks, 3 months, 3 years, I couldn't tell you. I could guess. What I do know is that the price drop is somewhat artificial. Meaning, just because the coronavirus is here and everyone is going nuts, doesn't mean the value of the company is what it is currently in the stock market. So, the value of Air Canada did not go down 80%. The stock market says it does, but the actual market value did not go down 80%. Therefore, there's a huge opportunity to purchase stock/shares of companies for a dramatically reduced price, lower than the current market value. Once this coronavirus pandemic craziness is over, people will shift away from fear and will become fear to confidence. And with confidence comes the buyer's market, the bull market. Right now, you're in bear territory. So, for example, one stock I'm looking at, I don't know the exact numbers in my top of my head because I'm not looking at it right now. As you can see, I'm driving. But I think in around January 2020, Air Canada was roughly $50, $60 a share. And this is on the Toronto Stock Exchange, so Canadian dollars. Just one example. Today it dipped down below $10. It was at like $9. I think it's now at around, well, the market's closed right now, but I think it's closed around $12 or $13 Canadian. So just that alone, that's an 80% drop. So the good advantage of buying at the dip is it's down 80%. So if you buy it now, eventually, once the market goes back up and goes back to $50 a share, you 4x your money. So you go from 12 to 48. So there's a huge opportunity. And I think, based on several factors, one, assuming China's numbers are accurate, which is kind of not 100%, I'm not 100% confident that they are accurate, but assuming they are accurate, I think the other day there was one new case of coronavirus in one person. So there's a timeline here. apparently in December it started happening in China, and now we're in March, 3 months later, and it peaked and now it's going down. So let's say it's 3 months. In America and Europe, it started about 3-4 weeks ago. So there might be another 2 months of it happening, and then it will take a few months for it to come back up. I think within 1 year's time, to be safe, 2 years' time, the market, most of these industries will be back to normal. That means if you invest $100,000 in Air Canada today, in 2 years, March 18th of 2022, you have at least 5 times your money. It will be at least back to $50, $60 a share. And it could be much earlier than that. It could be much earlier than 2 years. It could be 1 year. It could be 6 months. So that's the thing that I'm most confident in. Okay, I'm not going to get into short selling and put options and underwriting contracts. I'm not going to get into all that, because that's a whole other ball game, and I'm not as confident in that success. What I am confident in is, if you have $10,000 set aside that you know you won't need for the next couple of years, buy stock across the board. Don't invest in just one company, because the key to limiting your risk and sort of guaranteeing your overall success is by diversification. Because one of these companies, aside from getting bailed out, one of them could go bankrupt. One of them could have such a bad time with this coronavirus pandemic and be so affected by it negatively and not have the necessary precautions and cash on hand to sustain their company. They could go bankrupt and their whole company could close down. So although I may like the stock and I may like the value, invest in a wide variety of industries, and in each industry you pick, invest in a wide variety of different companies. That way you protect yourself in case one goes and the rest go. Okay, so that's what's happening with the market. I think it's going to continue going down for at least another few weeks, at least. And I think long term there's a huge buying opportunity right now, and this doesn't happen very often. So take my advice, go get it. Even if you have a couple $100, whatever you have that you don't need to spend, put it in the market. Thank me later, and all the best. Wish everyone to be safe and secure with their families this time. And don't take my word for it. Look at any top economist or any economist, any person with knowledge of the stock market, or look at the 2008 market crash and see the values then when it crashed, and see the values 2, 3, 4, 5, 6, 7, 8, 9, 10 years later. You'll see what I'm talking about. Okay, all the best.